Mendes is a senior economist at CIBC Capital Markets. And Royce, great to have you with us. Obviously, there will be very different reasons on both sides of the border in terms of what's driving jobs. I imagine that we can put the Canadian data pretty squarely on the third wave of a pandemic. We are not reopening yet.
Yeah, that's right. Disappointments on both sides of the border. But in Canada, it's really the result of a third wave. It's not surprising. It's a temporary detour. This too shall pass. All of those things we've been saying about what we need to expect in the upcoming data for Canada. I think this weakness in the economy is going to persist into May. We're in May now. We haven't seen, reopenings yet. In some places in Canada, we have seen the need for further restrictions. So, I don't think we'll start to see the recovery from this third wave start to begin in earnest until the summer really gets rolling.
And then let's just focus on the U.S. side of things, because I guess it could be a bit of a predictor of what we see, which was they had such strong data, as you would expect, as reopening began. What do you think is in the mix here? It is, in fact, so surprising that you almost wonder whether there isn't some kind of error in what's being captured or how it's being captured. But it could well be a little bit of reluctance on the part of some workers to go back to work. That might be what's showing up.
So I'll look at it as a little bit of a glass half full. I think what you could see from the data was that there was clearly strong demand for labor and employment, but there wasn't as much supply to keep up with that. So you saw wages rising. That, the lack of supply, I think you can chalk up to a few things. The virus is still very much at play in some places in the U.S. Makes people a little bit more hesitant to go back into work. Some parents might still have childcare duties at home, but overarching all of this has been the generous fiscal support, which has made the need to return to work very quickly, not as much as it would be otherwise. The question is, how long does this persist? Is this just some 1 month volatility? We don't know. But I think, from the looks of it, and when you think about those dynamics, this doesn't necessarily mean that the Federal Reserve needs to be more dovish. Actually, if wages are heating up and labor supply remains low for some time, that'll start to feed into underlying trends of inflation. And that's, remember, what the Federal Reserve is really keeping an eye on.
Yeah, it's interesting. I mean, you could also flip it around and say the Fed has been exactly right in not trying to move sooner, as some other banks have, including our own, and now the ECB, in kind of taking some stimulus out of the mix when it comes to quantitative easing. There will be some choppiness in this recovery, and I guess the real kind of $64 million question is, can the Fed get the timing right and the targeting right of how long you stimulate, but you don't want to overstimulate and see inflation happen?
Yeah, it's going to be really difficult for them to stick with that 2024 timeline for the first rate hike. As you mentioned, central banks around the world are reducing the amount of stimulus that they're providing their economies with. In Canada, the central bank has committed to keeping rates low for some time, but not as long, nowhere near as long as the Federal Reserve is. And, if this does start to, if labor supply issues are something that persist for a little bit longer, and it starts to feed into underlying measures of inflation, the Federal Reserve might have to reassess what they view as full employment. Maybe in this recovery, full employment is achieved with a slightly lower employment to population ratio, maybe that they had initially anticipated. These are all the things that are going to be coming out of this pandemic, which was unprecedented in nature, are going to be different than any other recession that we've come out of. And so there's not a lot of historical examples for us to go on. And that's why policymakers in general are, as you mentioned, the Federal Reserve is taking a slow approach. They'd rather have too much stimulus rather than too little, and get a little bit of overheating rather than leave the economy short. As the former governor of the Bank of Canada said, a fireman never gets criticized for using too much water.
Yeah, although, as some, including myself, have noted, Royce, your house is pretty much ruined when the firemen leave. So it's a question of what your goal is. One thing that may be showing up in the U.S. data, and I think we suspect it in Canada, we certainly have heard anecdotal evidence workers not going back to work because of the generous government support. Now, we know that's not a huge number. I don't want to overplay that. But there may be, of course, in this sort of handover period, a tough time getting people back. We have some policies in this country aimed at trying to kickstart that and move it along a little faster. Do we need to worry about that, though? Some stickiness of people who have government support and while it remains may not jump back into their old jobs, maybe because they feel risky or it feels too soon.
Yeah, I think in many ways what we're seeing in the U.S. is just a preview of what we should expect here in Canada. So if there are difficulties pulling people back into the labor force, we should sort of expect that to happen here. Look, the virus is still raging in many parts of the country, so people are going to be afraid to go back to work. They may have the same childcare duties at home. And, the government is still providing support. As you mentioned, the federal budget did include some measures to try to kickstart hiring once the pandemic is behind us. But we'll see how well that works. Policy programs always work great in theory. We'll see how it is in reality. I think, though, overall, the good news is that the demand for labor is there. The demand for labor is key. If the demand for labor wasn't there and we saw businesses struggling and not really interested in hiring people, I'd be a lot more concerned about what the outlook was for both the U.S. and Canadian economies. But with the demand for labor there and businesses wanting to hire, just not being able to for one reason or another, which could very well be transitory and tied to the nature of the virus, I'm more confident that, these are sort of growing pains as we exit and hopefully put the pandemic behind us for good.
And of course, in all of this, as we continue to kind of watch inflation and think that it might be transitory, what's your thinking about what we're seeing on commodity prices that are clearly inflationary? It's hard to know, obviously, Royce, always how much of that is speculative, i.e. just sheer investors looking for a place to put money. It could be some element of that, but how much of it really is natural price pressures of supply and demand?
Right. How much of it is speculative? How much of it is people trying to hedge some of their inflation exposure and putting it into some asset classes that appear to be reacting to these inflationary pressures? But, if you look at what is in the consumer price basket and what households face in terms of costs every month, some of them, yes, will be building a new house and will have things like lumber prices to take into account. But most people don't do that very often. And that's why it's not a big weighting when we take into account the overall price pressures from things like lumber or copper in the price basket. A big part of that price basket comes from the labor. That's what we're paying for. And that's why economists always look back to the labor. What is going on in the underlying trends in labor? If that's picking up, then we can see inflationary pressures picking up. But sometimes in aggregate, as commodity prices rise, sometimes businesses will eat those costs and don't pass them on to the consumer. It's really not as clear cut as seeing commodity prices rise and then forecasting a big overshoot in inflation. It'll really matter what happens as we exit this pandemic, what happens with wage growth. If wage growth remains very strong as labor supply picks up, then I think we should look at inflation as a little bit more persistent than maybe some central bankers, particularly those in the U.S., are looking for.